the majority of advisors are under this assets under management model. So they essentially make their money by having your assets under their management, and they charge a 1 to 2% fee. So therefore, they are only going to be recommending to you products that fit inside. If you're working with Morgan Stanley or Merrill Lynch, those are the only set of products that they are going to offer you in terms of how you can buy your wealth.
Welcome back to Keeping It Real Estate, presented by Granite Towers Equity Group. I'm your co-host, Mike Roeder, and today we have the privilege of speaking with Dave Wolcott. Dave is a former Marine Corps captain. He's a father to triplets, and now the founder and CEO of Pantheon Investments. Dave's mission is to reshape the way entrepreneurs approach wealth building, and he challenges conventional financial advice, advocating for passive investments in real estate and alternative assets. So with that, Dave, it's an honor to have you on the show today.
Hey, Michael, really grateful to be here to connect with you and your audience.
You bet. Well, Dave, let's start off in the beginning. I'd love for you to shed some more light on your story. You transitioned from a captain in the Marine Corps, which, thank you for your service. And then you shifted over to an entrepreneur, investor, and eventually an author. If you could tell us a little bit more about that path, that'd be great.
Yeah, appreciate that, Mike. So, I was in a middle-class family in Connecticut, and, I was told that the recipe for success was go to school, get good grades, then you're going to get a job and life would just work out, right? So I followed down that path and, had the opportunity to serve my country in the Marine Corps, which was an amazing experience. I was combat tested, work with some amazing people, travel the world, and learn some things they actually just don't teach you anywhere else. Things such as, leadership, integrity, and teamwork. And then when I transitioned from the Marine Corps, got into the tech industry, and, in corporate, I just got quickly frustrated with the bureaucracy of the way things were done. And I same sense of purpose that I had in the Marines, right? To have a true mission that we were helping others, we were serving our country. It was a mission that was than anyone else, and it was really helpful for me. And then I just felt like I lost that, right, in corporate America. So at the same time, my wife and I had an 18-month-old, and then on October 4th, 2000. We actually hit the baby lottery, as you mentioned, and had triplets. So we quadrupled the size of our family, Mike, like overnight, right? This is something you literally, read about in the newspapers. You see it on the news. I'm like, how is this happening? I mean, this is like really insane. But the first thing that was going through my mind, besides that shock, was saying, okay, how am I going to provide for financial security for my family now that I've literally just quadrupled my family? So I went to see my financial advisor, and the only advice, he could give me was, well, max out your 401k. And then they have these things called 529 plans that are, tax efficient, and you can put the money in those for your kids. And, it was right then. And I just realized that, what, the top 1% are not building their wealth as retail investors in the stock market. So it launched me on this obsessive journey to figure out how the top 1% are really building their wealth. What does wealth, truly mean? And so I spent the next 20 years investing in alternative assets, everything from, multifamily to single family rentals to office parks to retail to oil and gas. And multitude of different investments, and, was reading every book and things like that. And so fast forward to 20 years from then, and I really created Pantheon to share all the things that I've learned people and to really create an overarching, wealth strategy that people can kind of incorporate into their own lives to help them really accelerate their wealth journey.
Wow. Yeah, that's an inspiring story. And going back to your financial advisor, I hear so many people with a similar story where, they're just given one option, stick funds into the stock market or into their 401k or into a 529. Dave, why do you think most financial advisors, have such limited advice? And maybe not limited, but it's just, in one sector, and they don't have access to alternative investments. Why is that?
Well, it's actually really simple, Mike. And if people understood the way the financial services really works, the majority of advisors are under this assets under management model. So they essentially make their money by having your assets under their management, and they charge a 1 to 2% fee. So therefore, they are only going to be recommending to you products that fit inside. If you're working with Morgan Stanley or Merrill Lynch, those are the only set of products that they are going to offer you in terms of how you can buy your wealth, or grow your wealth, right? And the other thing is that you have to realize that those are retail investments, right? And all of us as smart consumers, you want to be thinking about, hey, how can you buy things at cost or get better deals? Well, when you get into this private space that's outside of institutional layers of infrastructure and costs and overhead and everything, you can get much better returns.
Certainly. And, going back to the fees that, some of these advisors charge, a lot of people hear 1 or 2% or 3%, and it sounds so minimal. But when you compound that over time, it can make a massive difference on your wealth and the money that you have in those accounts. So that's something that's very important to understand as well. Let's shift gears a little bit. So you published your book, I believe, back in May of 2020, The Holistic Wealth Strategy, Your Roadmap to Financial Freedom. I'd love for you to tell us a little bit more about why you wrote that book, what it took to write it, and start out by, what is phase number 1 in that book?
Sure, Mike. Yeah. So it all really starts with a vision statement, right? If you don't have a target, you're going to miss every time, right? So I think creating this vision for yourself and for your family of what life really looks like for you in the next 25 years, things like if you had $1 billion in your bank account, what would you be doing? Who would you be with? Where would you be? And doing some kind of deep thinking on that. And I think realistically, Mike, people haven't done enough deep thinking on what wealth truly means to them, right? Because it could mean greater impact. It could mean more time to spend with your family. Could be traveling the world, right? It means a lot of different things to people. What I wanted to do with this book is really create an opportunity and create something very tangible and practical that people could just kind of, follow a set of steps and use as a framework wherever you are in your journey to be able to, not only multiply your wealth, but also protect your wealth, right? And cover the whole thing. So we start with creating a vision, and then we move into 5 distinct phases.
Got it. That's amazing. And I think that vision is so important, whether it's for your life or your career path, or your family. And, a few things that I've learned over the years is you want to make it visual. You want to have something in front of you that you can see day to day. You want to make it emotional and then go over it often. I think that's really important as well. But Dave, why don't you run through the first step in the book or the first phase?
Yeah, you bet, Mike. So the first one is really all about you, right? And your mindset. So what's the difference between maybe someone you went to high school with who still lives in the same town, has the same circle of friends, and has the same job? What's the difference between that person and, say, Elon Musk or Richard Branson, right? It's all mindset. So, conquering some of those limiting beliefs we may have had by our family, by our peers, by our, people we work for, things like that, getting rid of those beliefs, creating goals and habits that are actually going to support your vision. Those are really, key steps. But so much of wealth building is all around mindset. we really just limit ourselves with the potential that we truly have. So why not take down those filters and realize, like, how could like a really big life look like, for me?
Yeah, I couldn't agree more. And, limiting beliefs. We went to a few different Tony Robbins events, and they crack down on that hard. Multiple days, multiple hours that you're spending on that. And it's amazing how many limiting beliefs come up that sometimes you're not even aware of. So I think spending time on that is crucial. And then you also said create goals and habits that are going to support your vision. Completely agree there as well. How about phase number 2, Dave?
Yeah, so in phase two, Mike, we have really an equation for building your net worth. And what that is your net worth is equal to your financial IQ plus your mindset IQ plus your physical capital plus your relationship capital, right? Many times we often just think about, like, hey, I want to grow my wealth. What's the return on this investment? What's the return on that one? Well, number one, if you can grow your financial IQ and learn about unique opportunities that you might be able to present to your investors, or unique opportunities that are out there that can have an asymmetric return, meaning lower risk and higher yield, and support you where you are on your journey, that's really powerful, right? Versus just taking, what your Merrill Lynch advisor is telling you, this the standard diversification in 60% stocks, 40% bonds, right? So that's a big one, right? Financial IQ. We talked about mindset IQ and how important that is to wealth. That is really one of the biggest, determining factors. But let's not forget about health, Mike. Like, you could have all the dreams in the world, but if you didn't have your health, you'd only have one, right? So I focus on my health. My goal is to live to 146. And what that does for me is, it might sound outrageous, but what that does is it spans my life in my present moment. And I'm able to be much more enriched, and focus on my vitality. And I'm learning, lots of things. I'm 53 right now, but constantly learning about, how I can just kind of increase my energy, increase my vitality and longevity. And, we live in such an amazing time that there's so much technology out there right now that help with that. So health is super important. And then last but not least is relationship capital, right? You're really a product of the 5 people that you spend most of your time with, right? And Ron likes to say. So, is, your circle relationships getting you closer to achieving your wealth vision, or are they taking you further away?
Got it. I love that phase. All great information. How about phase number 3, Dave?
So in phase 3, we talk about basically building a dream team around your wealth. And we also think about basically creating some infrastructure. So, again, Mike, I think most of us, when we think of wealth, it's all just like, okay, what's the return? I'm making 8%, or I'm making 10% over here. That's all the extent that we think about it. But, not only do we want to, multiply our wealth, but we want to protect our wealth. So do you have a tax strategy in place with a proactive CPA who's on your team that's actually doing tax planning and strategic planning, understanding, how we classify your income, what your goals are, how can we maximize tax efficiency in your strategy? Very underlooked by most people, and taxes are one of your biggest expenses, so something you definitely want to shore up. We also help our clients implement something called infinite banking, which, maybe your folks have heard about, but it's such an amazing vehicle that a lot of the ultra wealthy have known for many years. And it's basically a cash value whole life insurance policy where you can put capital that's going to grow tax free and create a liquidity strategy for you where you can borrow against that money to go invest in a real estate opportunity to pay for your kids' college, or to provide for that shortfall that you might have because you're, in between work or something like that. So, creating that level of, protection in your wealth strategy is very foundational. And of course, there's other things like, estate planning, advanced planning, and thinking about, future generations and how you're strategically, structuring your wealth is very core.
Yeah, and I think it's important to create that infrastructure early on, because the further you get down, the path of your career or investing or, forming your business, the harder it is to integrate it and the more time and effort that it takes. I love that you said, work with a tax strategist, a CPA that's very knowledgeable. And if any of our listeners out there don't have that team member on their team, start asking around, ask successful individuals if they can give you a referral, and look into multiple options, before you bite the bullet and you jump on board with someone. Infinite banking, very interesting. Estate planning and advanced planning. Any other, I know you talk a lot about alternative investments, Dave. Any other alternative investments that you really are liking these days?
Yeah. So the way we see it, Mike, is we're trying to help investors create 100-year portfolio that's going to manage through different cycles, have some diversification between operators, markets, return profiles, and you might be in a stage in life where, you need more cash flow, right? Or, maybe you're in a position where, the growth equity is more important, right? Because you're younger and things like that, right? So, we're typically looking for assets that have cash flow component to them, tax efficiency, and some type of forced appreciation in the asset. And we've been doing that, recently, oil and gas. We have a few projects we've done in oil and gas, which have been phenomenal because number one is it's an offset to your active income. A lot of people don't realize. So you can take, whatever your adjusted gross income is, and 100% of an investment in oil and gas can reduce that income. So that's very good if you're a high income earner. Plus you get cash flow coming off of these things that can be quite lucrative as well. So that's a really nice asset class. Another really great one that a lot of billionaires are seeking out, and we've really taken advantage this year of the banking sector meltdown, which is merchant cash advances. And we have a merchant cash advance fund, which is essentially providing kind of short-term factoring or funding to small businesses that are growing. They need capital. And they're typically paying about 34% within 7 months to access this capital. So they pay a premium on that capital, but they're able to create an entirely new revenue source. So we're helping out the business owner. And of course, investors get, significant cash flow, double-digit returns on that. So that's quite strong. And of course, we like real estate as well. So just creating an overall, balance in your portfolio of these different types of assets.
Well, thanks for running through those alternative investments that you focus on. Let's talk a little bit about stage 4, if you want to run us through that, stage 4 in the book.
Yeah. So the last one, it's really doing asset repositioning, because the majority of people still have their assets tied up in two places. It's either in locked up in their primary residence in equity, or it's in government-sponsored qualified plans. I actually, about 10 years ago, I took all my 401k money, I exited it, and I figured I would break even in about 4 to 5 years. And we actually, completely broke even in 2 years. I offset all the tax consequences, and I've tripled my money since. And something that's really amazing, Mike, we actually have a 401k exit calculator. So if anyone wants to reach out, we can send that to them to do an objective analysis. But if you take 100K that's in a 401k, let's say you paid the 10% tax penalty, you paid 35% in taxes, and then you'd have a net investable 55K. If you put that into assets such as you have or that we're talking about today, assuming a 20% annual rate of return over 20 years, that 55K will grow to over 2 million. If you keep it in your 401k, it's actually only about 250. So looking at things objectively is quite eye-opening.
Got it. And it cut out there just a bit, but you said if you keep it in your 401k, it results to about 250
250K. Yeah.
Yeah. Huge difference. And why do you think there's such a massive difference?
Because of the three, dimensions we talked about earlier, right? Which is, it's tax-free compounding. That's really huge. You're getting cash flow, right? And you're getting much higher returns than, the 7% that the S&P is doing. And people just don't realize that, even when the market goes up in a given year, when it goes down that next year, your entire value is going down. So it takes that much more to come back up, the next year. And when you model that out over a, 20, 30-year period, I mean, it's significant.
It really is. And I did the same thing as you. I took all of the funds that we had in our 401k and placed them into alternative investments. And I've been able to hit much greater returns than I would have in the stock market. So
awesome.
Completely on board with what you're saying here. And I believe there's a fifth stage in the book. Is that correct?
Yeah, the last one is the fun one, which is build massive passive income. And, that's all about, doing deals and creating this 100-year portfolio, right, that has some of this diversification. Again, and this is all focused on supporting your vision and what's really important to you.
Fantastic. And, to our audience, we'll have the link to buy Dave's book in the podcast description. So keep an eye out for that. Dave, before we part today, any advice that you could give for investors out there that are either looking to passively invest or looking to actively invest?
Yeah, Mike, one thing I'll do even better because we're supporting our veterans charity, the fund.org. So all proceeds, in fact, not only all proceeds, we're even matching all purchases of the book. We're matching those funds to go to our veteran charity. And so we'll give a free copy of the book to people. It's at holisticwealthstrategy.com. So they can get a free copy there. Or if you purchase it on Amazon or anything, those proceeds are going to our charity. But to answer your question, the biggest piece of advice I could tell people is your biggest, most massive rate of return is when you invest in yourself. You can invest in your education, your relationships, your mindset, your health. All of those things are so foundational. And I've had 100x return in those types of investments. And that's all driven, all of these other things. And again, I think to me, Mike, right, it's really kind of around like the four freedoms that Dan Sullivan talks about, right? It's not only having freedom of money, right, to do whatever you want, but it's also having freedom of purpose in your life. It's having freedom of time. It's having freedom of relationships, to spend time with those that you really care about and that are meaningful to you. So when you kind of unpack those and you think about how can I invest in myself that support those freedoms, that support my vision, that's how you're going to live, such a more enriched life.
Absolutely love that. And Dave, how can our listeners get a hold of you if they'd like to reach out to you?
Yeah, the best place, again, holisticwealthstrategy.com, free copy of the book. We have the bonus materials if you want that 401k exit as well, that exit calculator. And or, reach out to us on any other channels. But, that's the best place you can get some more access.
Fantastic. Well, I really appreciate you coming on the show today, Dave. And for our listeners out there, don't forget to hop over to granitetowersequitygroup.com and subscribe to our newsletter. We have a lot of content from our guests as well as market data, and make sure to leave us a rating and review so we can keep having guests like Dave on our podcast. So Dave, it's been a pleasure being with you today. I really appreciate you spending time with us.
Mike, really appreciate it. It was a blast.